Market recap for October 4th, 2018. We finally got our sell-off in major indexes like the S&P 500 and the Dow Jones. Looking at the S&P 500 proxy ETF SPY, first down about 0.8% today. Found support at the 50-day moving average, bounced into the close, showing that the bulls still have some fighting power left in them. A peek at the Q's NASDAQ 100. Broke below the 50-day moving average, closed right at or even slightly below the 50-day moving average. Volume was tremendously high today. Not a good sign for technology stocks as it failed to break out in late September and then just fell apart today and over the last 2 days. Monitored the larger technology stocks to see how this one plays out. Apple, AAPL. Broke out. That was a failed breakout yesterday. Fell below today. Might need additional consolidation before this one moves higher. Google fell below the 50-day moving average. Tried to break above it but failed. And then now it's trading below the 100-day moving average. Again, not a strong sign. 100-day moving average marks intermediate terms stock trends. And being below that is definitely not a great sign. Another one, Netflix, just covering the fangs right now. Netflix is a stronger technology stock. Failed to make new highs after the June peak, but still closing relatively close to the 100-day moving average. Fell about 3.5% today. We'll see how this one plays out. Another failed breakout in early October around this price area. And lastly, Amazon fell below the 50-day moving average, lost momentum after losing the 4-day exponential moving average. Here, fell below 50-day. Look for 100-day to be a magnet on Amazon and become a buying opportunity. If you look at a longer chart, stock tends to trade above the 100-day moving average and then consolidate and then trade above again. So if it gets there, treat it as a buying opportunity with a 5 to 7% stop loss and see where this one goes. Back to small caps, IWM, another oversold signal. If you look at how to play this one, we do want to see the stock or the ETF hold above the 200-day moving average and trade and close above the oversold signal that we got today. A high of today is 165.7, so look for that as an entry point. If we look at historical oversold signals in the IWM, February we got three of them actually, and once it traded above, it bounced much higher and tried to make new highs. That's a trading opportunity there. Again, August 2017, oversold, traded above. If we have a stop loss in place, we would have gotten stopped out around here. Then we got two more oversold signals, traded above and closed above the oversold signal 2 days afterwards, and then staged a rally that's also very tradable. The only time this does not work is if we look at 2016 when we got oversold signals below the 200-day moving average. We don't like to play long entries that are below the 200-day moving average. Same thing with oversold signals and indexes. So if the IWM manages to stay above and close above the 200-day moving average, or even stay within a reasonable distance to the 200-day moving average, then we can play this oversold signal. Another one that worked really well is in 2017, actually November 2016, oversold signal, tried to close above, did not work. Then we got a gap higher, closed above 3 of these oversold signals, and then we all know what happened from there. IWM continued to trade higher throughout 2017. So look for this to be an entry signal in the near future. If it does not hold and the stock trades significantly, I'm talking 3 to 5% below the 200-day moving average, stay away and don't touch it. Individual stocks, PAGS, recent IPO, Brazil-based internet company, shoulder, head, shoulder, little cup and handle signal here. Try to break above the 100-day moving average. Succeeded yesterday, failed miserably today. Keep this one on your watch list, but stay away for now. Watch for this to consolidate a little bit more and break above that $30 price range before we make an entry. In market environments like we've seen lately, we want to see stocks hold up well. FMC, chemicals company, traded above and closed above the 4-day moving average, down about 0.75% today. This will be a leader if the market does not fall completely apart. A couple ways to play this. One is to look for the highs in May of $92, $95, or $93 as an entry point and then trade higher. Another way is to buy closer to the 4-day moving average if we get another down day tomorrow. Earnings are growing strongly at 300% last 2 quarters, and revenue is growing almost at 100% year over year as well. P is a reasonable 16.84. FMC, put this one on your watch list. Caterpillar got a lot of excitement on the Twitter sphere yesterday because of how it managed to trade above the 200-day moving average and then break above this little consolidation period on significant volume. However, the stock pulled back today with the broader market down almost 1%, closed above the 4-day moving average. We'll put this one on the watch list as another strong stock to monitor. Now let's run through a couple IPOs lately. PDD just completely fell apart, down about 13%. One needs a little bit more time to consolidate before we really put this one onto the watch list again. ANET, again, strong fundamentals, traded below the 200-day moving average, not a lot of traction, is in the technology sector. However, PE is only at 43, which is reasonable for a higher growth company. Therefore, it's not a huge decline in price today. We exited a couple stocks lately. Boot Barn down about 9%. Again, look for breadth, look for internal strength in the indexes, and exit when you see there is any danger signs, or even just to take some profits off the table. What we did here is we traded off of the lows in late September, got a big bounce heading into October, and then stock traded sideways before we decided to throw in the towel and figure this one did not work. Worked out for us, down about 9%, so got lucky there. FBR, same thing, oversold, reclaimed the 200-day moving average. That's when we got in, found resistance at the 50-day, at the 100-day, and then we just sold this one because it wasn't getting anywhere, and it's a new position. Not a whole lot of leeway for any damages in our account. Exit the loss, exit the position, exit the small loss. Look for other opportunities in the future. HT is another one that we looked for a short as it traded and found resistance at the 50-day moving average. Not down a whole lot, only about 3%. Lodging company didn't take the bulk of the beat down, unlike many technology stocks. SQ held up reasonably well, still trading above the 93, 92.5 price. If it does manage to trade below 92.5 and go back into this nasty 82 to 92 trading range, then we'll just exit this position. It's been a long time since we've held this, all the way back in February when it bounced off of its 100-day moving average. It's almost a double at this point, or even close to a triple at this point. Just exit the position and look for other opportunities as they set up. A few more leaders. PayPal, PYPL, approaching the 200-day moving average. If it gets there, look for a bounce. At this point, it's starting to look like there's a lot of bounce opportunities in the market. IQ, internet company, if we do manage to undercut the 24.5 price and regain that price, there is a chance of an undercut and rally. Billy, BILI, try to break out on the third based off of 10 cents news of capital injection investments. However, traded down today, down about almost 6%. Exit this one, not working out well. We want our positions to work out, to break out, and then to work almost immediately out of the gate. AMD, Advanced Micro Devices, a leader that we've been tracking, along with a BMD, a Biomed, another leader that we've been tracking. They're all coming down in price. Tried to break out, failed in October, and then today down about 2.25%. Momo, Chinese stocks took a huge beating today, down about 7.7%. Approaching that 200-day moving average. Look for a bounce opportunity. Baba, trading firmly below that 200-day moving average after it tried to break above in August. Shortable bounce here. Now we're approaching that low of 152.8. If we get there and we stage a rally, undercut rally, good way to play a couple points. Weibo, WB, new 52-week low today, still below that 200-day moving, still below all major moving averages, and all moving averages are trading lower, trending lower. Again, that's why we don't want to play oversold signals when they are trading below the 200-day moving average. Stay cautious on this one. Don't be a hero. Overall, the market is in position for a bounce. However, a lot of opportunities to look for. FMC is a strong one. CAT is another good one. PYPL for a 200-day bounce. And then ABMD is a strong stock, failed breakout, but if we manage to find support at the 100-day moving average, this will be something that we look for to enter. MVIS, Microvision, this is AR company, augmented reality, down about 4.5%, trading just slightly below the 4-day exponential moving average, still above that 200-day moving average. Again, this is a smaller cap company, not profitable at all. Don't place a whole lot of your account in here. However, if it does stay above the 200-day moving average and trade above the 200-day moving average, this is a strong stock that we should be playing and holding until further evidence proves otherwise. That's it from XYBC. If you have any questions or if you have any stocks that you want me to look at, just leave a comment down below. Thank you for watching today and good luck.